In this video, we're going to talk about one of the most critical topics in the financial world right now, and I guess the world in general, especially if you're in the US and you have a 401k or a retirement account. There's chaos in the markets right now caused by the tariffs, the soaring Treasury yields, and a liquidity crisis in many of the financial analyst opinions. In this video, we're going to break down exactly why that is and if there should be concern in the coming weeks and months ahead this year, or if things are kind of blown out of proportion. And we're going to show you exactly how to take advantage of this volatility in the market. Before we get started, be sure and hit like and subscribe down below. Download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. You're the one taking the risk, so you've got to do the ultimate risk. The U.S. stock market has experienced some extreme volatilities over the last couple of weeks. This is due to the tariffs, the escalating Treasury yields, and liquidity concerns. Here's a breakdown of some of the factors influencing the volatility. The trade war escalation with China. President Trump's recent tariff hikes on Chinese imports to 145% intensified fears of a prolonged economic fallout. This follows a temporary tariff reduction for other nations, which initially sparked a historic 9.5% S&P 500 rally. China's potential divestment from U.S. Treasuries has raised alarms. Its holdings have dropped to $759 billion, which is the lowest since 2009, with overnight Treasury yield spikes aligning with Beijing trading hours suggesting strategic selling. This has really caused a lot of Treasury market stress. The 10-year Treasury yield surged to 4.51% midweek, nearing levels last seen in 2023 before stabilizing at 4.27%. Analysts attribute this to foreign selling and weak auction demand, with a recent 3-year note auction showing a bid-to-cover ratio of 2.48. Hedge fund activity, including unwinding of leveraged-based trades, exacerbated volatility, drawing comparisons to the 2020 dash for cash crisis. And there's always dynamics with liquidity and short coverings. Wednesday's record stock rally was driven by aggressive short covering and historically low liquidity in the S&P 500 futures, amplifying price swings. However, this rebound lacked conviction, with futures declining 2.1% by Thursday morning. The CBOE Volatility Index, the VIX, hit pandemic-era highs earlier in the week, reflecting extreme investor anxiety. There's some diverging narratives happening right now between the White House narrative and the analyst expectations. The administration emphasizes strong economic fundamentals, pointing to Wednesday's $5.1 trillion market gain as proof of resilience. Many analysts warned that bond market signals, which is rising yields amid equity rallies and foreign selling of treasuries, indicate underlying fragility. The bond market's smart money reputation adds weight to these concerns. There's both bull cases to be made as well as bear cases to be made for the trade policy and the treasury yields and the liquidity in the market. As far as the bull case for the trade policy, tariff rollbacks or China negotiations could restore confidence. And on the other side, escalation or failed talks may trigger further sell-offs. As far as the Treasury stability, strong demand at upcoming auctions could ease yield pressures. However, persistent foreign divestment may spike borrowing costs, pressuring equities. And as far as the liquidity, improved market depth could stabilize prices, and low liquidity magnifies losses if shorts rush to exit or tariffs worsen. I'm going to show you now a couple of option trades that I believe are going to profit in the short term, definitely in the long term, and they're safe and they're utilizing leverage. Okay, guys, the first trade that I'm going to talk about is in Novo Nordisk. These guys are a pharmaceutical company, and you can see right here on the Yahoo Finance, the 5-year chart, they're down at $64.73 right now. The previous high looks like 143, right around 142. And this was just back in June of last year. So there's a huge upside. You can see the analyst target is 111. And so it's trading at almost half that right now. If we look at the analyst expectations, a lot of buys and strong buys are recommended, and they've beat earnings the last 2 times. So if we go to the Tasty Trade platform, we can punch in NVO, the ticker, in the upper left, and we can go to the financial section right here on this tab and look at the revenue and net income. We can see super strong financials with increasing revenue and net income year over year. The balance sheet with assets and liabilities is extremely strong as well. You can even go to About NVO and you can see that they're engaged in discovery, development, manufacturing, and marketing of pharmaceuticals. They specialize in diabetes and obesity care and biopharmaceuticals. So huge segments right now. They've got a great pipeline as well. Now, if we go to the trade page on the Tasty Trade platform, there's a link down below. If you are looking for an option trading platform, this is one of the best, extremely user-friendly and fast execution on trades. What we're going to do is a leaps option. Since we're not sure exactly when the market's going to come back, we're going to go out almost a year. We're going to go 279 days to expiration and open up this January 16th, 2026. So next year in January, the option chain. Now, by clicking on that, we open that up and we're on the trade page on the Tasty Trade platform. Calls are on the left, puts are on the right. We're going to buy a 60 call. It's in the money. It's trading at $64 right now. We're going to buy that for $14.80. Now, one option contract controls 100 shares of stock. So that's really $14.80 times 100 or $1,480. We'll click on the mid price, which will likely get filled at, and that's $14.35. So $1,435. But if you were to try to control 100 shares of stock, what you would need to do is buy 100 shares at $64.74. That's $6,474. We're controlling the same 100 for less than 20% of that at $14.35. Now, if we go to the curve mode, this is what I like about Tasty Trade. And then analysis, you can see as the stock price moves up, if it gets up to where it was previously just a few months ago, we'll double our money easy. But you can see as the stock price increases, the value of that option contract increases just like owning the 100 shares of stock. So in order to get our $1,435, in order to double that, and think what it would take to double that with stock, but you only need to get up to that $88 range from 64. And again, keep in mind the analyst targets and where it could head over the next few months. So we could hit review and send and place the trade. But what I like to do as well is, since the market's choppy right now, I like to collect premium and sell a call against it for no extra out-of-pocket money. So what's nice is the max you can lose is the $14.35 versus, technically the stock could go to zero. And if you were to buy the stock outright, you could lose $6,400. I doubt, NVO is one of the best pharmaceuticals out there. I expect it to go up. So that's why we're trading it. But anyway, a lot of benefits to trading options. But what I like to do is sell a call against it. I'll go to the table mode. I'll close up the Leaps option chain in January of next year. And I'm going to open up a closer 34 days to expiration. I like to go 30 to 45 days. And we're at 64 right now. I'm going to sell the 70 call against it. Now watch the price, the $14.35 come down right here. We're on calls and we're going to sell it. So $294. It brings down the cost of that the Leaps option contract to $11.38 because we're collecting $2.94 up front. So basically $300. And we can do this every month. If we did that for the next 3 months or the next 10 months, that would be $3,000 that we would collect. And that would triple our cost of controlling these shares up front. But what's nice is we're at 64. We can move up to 70, still collect money that the increase in value of the leaps option and keep this $2.94. So we win either way in both directions. So that's what I like about leaps. And this is called a poor man's covered call. So it's a covered call, except instead of using the stock as the basis, you're using a leaps option and selling the call against that. So we hit review and send and place the trade. Okay, guys, the next one, I'm going to use the exact same strategy. We're going to go long. Now, I've talked about this one before, and it's a screaming buy right now for me, but AMD, Advanced Micro Devices, the 5-year, you can see the high up here above 200. That's my target. They've got a target on Yahoo Finance of 144, but look where it's trading, $93 right now. And AI stocks are down right now. So this is an obvious long for me right now. If we look at the analyst ratings, they beat the last 3 times. A lot of strong buys and buys going forward. So I'm going to go a little bit quicker on this one, but on the Tasty Trade platform, you can see the revenue and net income increasing, assets and liabilities. These guys are super solid. We go to the trade page. I'm going to go out a year. I'm going to go to the 342 days, March 20. I'm going to buy, I'd like to go to the at least 65 delta or higher. I'll buy the 85 call for $24.30. And then at the same time, and again, let's look at that curve mode, and you can see as it goes up in price, we make money just like owning the stock. Now, go to the table mode, close that up. We're going to go to the May 16th. We're trading at 93.40. So again, it would cost $9,340 to control 100 shares of stock. We're going to sell against this. We could sell the 100, almost a 7% move up, and collect almost $500, $4.90. We could pay that thing off in 4 months, 5 months. But I'm going to go to the 105. That allows me $10 upside on the leaps, and we're going to collect $3.25. So I'm still collecting $325 a month. That brings the price down to $21.05. So hit review and send and place the trade. The market's near-term trajectory really hinges on the trade and the tariff negotiations. And as far as the liquidity and the Treasury yields, we'll have to wait and see. However, in the long term, let's realize, hey, this is a long play. We've got to be prepared for any situation and the coming months ahead. So let's stay true to our rules of option trading and the market and stay long, but do it in assets that aren't too risky and we know are going to move up over the long term, like the trades we just talked about. Remember to hit like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer everyone. Let me know what you're trading. And thanks for watching. I'll see you in the next video.